All right, guys, how's it going? It's Matt, and we are back on Wednesday, the 16th of February. Uh, yeah, it was a good day today. I was just kind of chilling. I decided to catch up on some sleep. And yeah, FOMC today, so don't be a meathead. Basically, yeah, let me update you. But just want to say, 700. We're climbing. I'm fired up. It's exhilarating to see. Every morning I'm waking up to new numbers and new people messaging me all the time, and it's just really cool. And I'm so grateful for it all. So thank you guys so much for this. And because of that, today we're going to be talking about trading psychology at the end. And I just want to give you my thoughts about it, and maybe it'll impact your trading and hopefully help you out. So thank you guys again so much, and let's dive in. So first of all, you can see that yesterday, what were we expecting? Because it all works off of each other, right? Yesterday, we were down here and we said, hey, we're looking to see the structural inducement get taken out. We wanted to see price get back down into this gap, into this hidden order block, and then continue up, right? So this is doing exactly what we said yesterday, what it was going to do. We enter up into this traffic level up here. And so that's where today starts, okay? So I had two options really going into today. Of where price was going to go, and you see them drawn out here. Okay, so firstly, there was again refined level right there of that hidden base, and I was anticipating at least coming down to here. I have this level marked off here, right? Just as this support and resistance zone. I know that that's going to get manipulated, right? I know that that's going to get manipulated because it's just so clear. We have support, or resistance, and then turn support. What I was actually looking at was this. You see these consecutive down candles? Those are going to be your order block. So if we tap in there, then we can continue up like that to take out this high and take out that high. So that was one of the options. Alternatively, because we saw these equal lows in Asia and there's a huge fair value gap under here. I was assuming that, right, we're in the daily breaker. So these dotted lines are the daily breaker. So I wouldn't be surprised if we come back down and we'd still be bullish, right? Because all we would have here is just a buy model on a higher time frame, right? Consolidation, sweep, break up, inducement, come back down. So would not be surprised to see that either. So that's why I just marked out these two levels. Okay, let's go to the next one. So this is the 15-minute. You can see we had a nice sell model right up here. You can't really see it on this time frame, but you can see that it was forming, right? You can see that there was potentially a break in structure here, but this nice candle right here, fair value gap right there, tag it, and it looks like that's going to be the next level to go down to. So that was on the 15-minute. So it was just one direction today, one bias. That's it. You can see right here, we have our QM that formed, right? Our entry model right here. We have consolidation, sweep above, break back down, fair value gap, block right here. Nothing's too clear on this. I guess you can just refine this to that one last sweep candle, because it's a pretty significant one, and that would have caught right at the very top of that. But I just left it on the higher time frame on the 15-minute one, because that's where the fair value gap was. And now week low, and you can see targeting 13,650. That was my target for, or what I would have looked at for shorts. Sorry. So you can see here, this is pretty beautiful. Okay, we sweep above. We have another micro kind of model right here. Sweep up, it comes into this fair value gap right there. Order block combination, boom, dies down. Order block right there, boom, dies down. This is the last point of mitigation. You can see 1, 2, 3 runs to that upside. And then you can see fair value gap here, mitigation, break, a swing point right here. And then there was a fair value gap here on a smaller time frame right there. And you can see inducement up into here, bam, down. So this was a really beautiful setup. There are some options here in London, and then early New York. There was all that. So you could have taken that. I personally wasn't even on. I slept in until right when I'm posting this, really. That's when I slept until. So I showed you here the opportunities that were potential for me. There's also this one here I missed, but I put it in the chat, into the chat, that yeah, it was a potential option. So you can see that was it. That's basically all that there was. And then yeah, I just said I didn't take these though. So just remember that, right? These were just available in London. Just wanted to post them so you can test and check out. I don't want to mislead you guys because obviously I know there's a lot of people that fake and pretend like they take stuff that they don't actually take. And so I don't want to be like that at all. And then, right, we're coming up here, like I said, right at that level that I marked out, support and resistance zone. I said, and then we had this trend line, and I said huge or manipulation around this level, of course. Like this is what we can anticipate at this level is manipulation. Okay. And then trend line has just been manipulated here, and now we're at a 1 hour order block and breaker right there. Again, all beforehand, right? 9:17 a.m. right into this breaker or this order block / breaker / hidden base right there on the 1 hour. And so inside the daily breaker, just be cautious here as we can continue right from here. And I meant continue up, right? It doesn't have to go take out Asia. So I personally believe it's going to get run. So yeah, I was thinking at this point, I said it looked like it still might get run, but I'm just going to analyze the smaller time frame. Okay, and then actually what ended up happening, if I can find it in the chat. In the chat, I'm always updating updating my trades and stuff in here because I don't want to bother a lot of people with a bunch of pings that they're getting. But let me see if I can find it, and you'll see the entry. Yeah, right here. Okay, so you can see I entered here on TradingView. I just traded demo today. I wasn't I wasn't trading real live funds today, so this was just demo. But yeah, I entered right down here at that same level. That's literally right at that level that I was talking about. The breaker level. Sorry, the 1 hour order block / breaker level. I entered right there, and you'll see that we ended up going and smoking and rinsing these highs here. So it ended up playing out super nicely for FOMC. And then what else? Yeah, you can see right here, which is beautiful, right? That 1 hour order block comes back up, returns back to this origin here. And you can see there's a nice hidden base right here, right at that OTE entry. So the next target was just up there. And that's what the macro that I was playing, essentially, the macro view. Okay, so that being said, let's jump right in. There was nothing else. Yeah, I don't think that there's anything else there. So let's go. So from top down, let's go daily. The first thing that I see in here, just started off as always, you know, same process every single day, doesn't change. Okay, we have this breaker block here. We also have this hidden base, but because price went down lower, we can just refine it to this. Okay, I would have typically just kept it like this. You can see we got a nice little reaction off that, and then we broke back down further. So then as soon as it breaks down further, I'm just gonna refine it. Okay, what else? So this is today, obviously, right? And what I was looking at today, if I just go to the replay tool and just show you what it looked like at the beginning of the day, is I was looking at this, right? Or last night when New York closed, this is what I was looking at. I said, okay, look at this. We hit a significant significant POI, right? Significant PD array, as ICT would say, or as ICT calls them. And we have 1, 2, 3, right? A 3 swing pattern, which means for me, I also see this, right? I see this fair value gap just above here. If I go to the FVG. So I see this 3 swing pattern after hitting a significant discount, right? If I just take this as well, you'll see, look at that. Okay, so we dabbled into discount of this price swing right there, hit that block, and now we have this 3-point swing. So I know with high probability that we're going to at least come and take out the previous day highs, right? We're going to at least come take out the previous day highs and fill into that fair value gap right here. And then probably you can refine something within this, right? If I just mark this out on the daily, then we can go refine it within. So we know that we have higher time frame sponsorship within this level, right? Higher time frame sponsorship within this level. So let's go down to the 4 hour. What do we see? One sec there. Let me just delete some of this stuff, get it off the screen. Well, look at this, right? We can refine it to this, right? The last traffic level before a significant move down. Nice imbalance, daily highs resting right here in front of it. That's really beautiful, guys. I mean, that's gorgeous. We can refine this down a little bit further if we wanted to, just to catch the refinement on that. And what do we see here? We see breaker block right here. Sure, it dabbled through it, no problem. It filled. Look where the body's closed. The body's closed above it. So any entry that's here, you can be taking and looking to take out that high. There's a very high probability that that high gets rinsed. So I would be looking at taking entries from long. You can also see, look what we have here, right? This is just an order block. This is an order block right here. So if there were any entries here, you could take it long and you could be targeting here. Look at this, right? Without over refining too much, or what I would do is I would just go like this, right? It's on the hourly, so it should get up to this level, right? There you go. What do we have up here? 3,900s and 1,400s. I called out 13,900s yesterday, I believe. If we go into the chat, or not into the chat, sorry, into the thing where I'm analyzing price, look at that. We're bullish until 13,900, right? That was yesterday at 8:57. Oh wait, was that today? No, that was yesterday. This was yesterday at 8:57 a.m. I don't know if I can check what the date was on this, so you guys can see. But anyways, you can just go into the page and you can see that it was from yesterday. I think it actually shows it up here. Yeah, yesterday. See? Scroll down. Bullish until 13,900. 13,900 up here. So this matches perfectly with what we're looking at. Okay. And so this is obviously the end of New York session. Well, what happens in Asia? We dip down. What we want to see before going long is we want to see a taking out of a swing low. What do we have right here? This is all an order block right here, right? This whole thing. But what I like is this fair value gap right here. I would love to see for price to dabble into this fair value gap. And let me just turn off the kill zones here. Not needed right now. Okay, so I would love for price to just dabble into that. Then you can look for your buy model and you can take that up, because now we have daily highs and you know that 13,900 is very, very likely to get hit. So let's see if it does that. Wow, selfish. Didn't get there. Completely fine. There was no entry. This was in Asia anyways. But what do we get? As soon as we tag this level, there we go. Okay. As soon as we tag this level, this is going to be the idea for today, essentially, right? Where we had this massive run and now we hit this level. So what happens when we do this? We have daily highs right here. We sweep up above, or we get up above daily highs. Well, what's likely to happen, right? If I just mark out the structural points from here on out, really, there's nothing that I can really see in here. I think this is all just one structural swing here, to be totally fair, like this, right? This is the clearest to me. So if we're anticipating upside, so we had hit our 13,900 target, right? The next move is down for me, right? It is just obvious for me that we have these highs that got rinsed, we had a gap that got filled, and now we have this very weak leg up, and we have this 1 hour order block right here, right? Well, this swept liquidity down here, right? We get a sweep and then we get an up move. So the last series of down candles are going to be valid. That's also our structure point as well. Okay. So there's just a lot of confluence in and around these levels. And so that's why I said I was going to look for longs. I thought it was going to break down, to be honest. I'll be completely transparent with you. I thought the way that it was coming down, I thought that we were going to come back down to sweep Asian lows and get down here, because I love seeing structural points get swept and go, right? Because everyone's longing at the structural point. So I love to see that, just like how this one was a structural point, and look what happens. We use it, break above it rapidly, and then we feed back into it. So that's why I was kind of looking at this level, in and around this level. And then I just marked out the support and resistance right here. Okay. And you can see how support and resistance gets manipulated if we just fast forward through it. Okay. So here's that trend line, right? Oh yeah, we're in a channel. Beautiful. It looks like it's going to go to the moon from here. We also have support and resistance here, right? Resistance, turn to support right at 13,650. That was my target or that would have been my target on sells. That would have been my target. The reason being is because maybe it does go from there. I don't know. Maybe support and resistance gets paid too sometimes. You know what I mean? So you got to be conscious of it. This is a huge traffic level here. So just be aware of that. So let's go 15-minute. You can see fair value gap right there after hitting our level. So I would just mark out this, see if there's anything in there on a smaller time frame essentially. Okay, and you can see that, yeah, very weak leg coming back up. I'd love to see price return back to the, we'll say the 3,600 big figure. That would be ideal. And we got to wait for some manipulation on this trend line before we can start looking for longs. Okay, so 5-minute, what do we have here? Like I showed you guys in the pictures, sweep on liquidity, very good structure. Now, what do we have? Well, we have a block right here that's holding, but we also have what on our higher time frame, right? We have to be conscious of that we have a higher time frame level right here. So let's go down to 3-minute. You can see we can mark out this. Actually, this is probably a better one to use. Let's go 2-minute. Right here, we can use that. 1-minute. Yeah, we'll just use that. You can use the whole sweep candle, but ultimately what do we have here is we have a mitigation of this block here. You can see it's swept a high here as well. So this is a nice little move. And then it gets used again right here. So this is really the last point. This candle is really the last point of mitigation. We have these lows down here that need to get targeted, right? We have an imbalance there. If you look on the higher time frame too, right? Imbalance, imbalance, imbalance. You can see that, right? Even on every time frame, this is an imbalance. So it's a really strong one. Okay, 3-minute. You see little price pause in there, little price pause in there, and now 1. Now, one of the things that I really like about this is this, right? We have an inducement. So what I would do, I know that there's a little gap up here that potentially might get filled later on, but I'm not even going to worry about that right now, to be honest, because this is the last point of mitigation that I see and that I would like to see. If we measure this down, this is also going to be in discount or in premium, sorry. So the first trade that I would take, well, if I were awake for this one, I would have taken that one, right? Just right there, because we have a nice order block right here. It tags it, right? You can put your stop above there or above there, right above this imbalance. It shouldn't get above that. So you can put your stop just above there if you wanted. Now this trade, I would have taken this, right? Just stop above there, 2.5 pips. Where's your target? Down to here. See how it develops. Okay, so now your target goes down to here, right? Because now this is just going to be an inducement for what? This puts it into even deeper in premium, by the way, right? Now it's even deeper in premium. So, which is really good, which is what you want to see. Right? Do we have any confluence with the OTE from here? Yeah, look at that, right? So we have a nice confluence with the OTE right around this level. It's also, no, it's not quite there. Never mind. I thought it was going to be at a big figure. It's at the 50 big figure, but that's already been tapped. So let's just see. Let's see how it goes. Okay, so just building up liquidity in front of it. So this is actually really nice because look at this now. Right now, instead of just one high, we have multiple highs building up liquidity right in front of this level, right? Think about this. If we're looking at structure, right, this is where that liquidity, or where smart money at least, is going to be trading from. Maybe some of them just got stopped out right there and they say, oh, sweep. Okay, now let's enter right here. We got that confirmation, stops above there. It gets rinsed, right? It goes right into this level. Look at how nice that respects the 70 level. So that's good. I would definitely be looking to target minimum here. However, managing position accordingly, right? Where would I be managing my position from? Well, let's see. Just going through different time frames just to see if this is going to go up, right? If this is going to go up, what are we looking at here? We have 1, 2, 3. So if it comes back down to here and then proceeds up, like I don't want to be in that trade anymore, right? I don't want to be in that trade. So as soon as we get back down to this level, I'll be mitigating out of my position by either taking some partials or managing my stop. So let's see if we can get down to there. Okay. So at this point, I'm managing my position 100%. Because this is the extreme point of interest right here on a continuation. And if we do continue up, look at this. What do we have? This wick has been unmitigated, right? Oh, this wick right here has still been unmitigated. And so I would not be surprised to see that go up one more time. And then this becomes your corrective structure here, like that. And it's just pooling liquidity multiple times right in front of that level. Okay, so let's see if it goes though. So right there we had, no, we didn't actually have anything. So let's just keep going. Boom. Okay, so there you go. I would be stopped at a break even for sure. Just with my rules, because if this is a weak high, I'd want to see it get taken out first, right? If it fails to break this low, if we fail to create a lower low, this is going to be the weak high. This goes and rinses that high with an inefficient leg. Now I'm looking for sells. This has everything I need. Maybe it's going to push up one more time into this, but I don't really care. I'll wait for a setup to confirm it, and then I'll take it down just to where? Well, the weak low right down here. Okay, that'll be where, and you can see right within this block, there's a nice amount of imbalance. You can see that right here where we turned was in that level, right? We turned right in that level. We dabbled into it, came back up, and good. So now let's just see if we get a setup. Let's keep it cruising here. You can see no setup, no nothing. And so right here would be where I would be looking at potentially entering a trade. I'm seeing now that we just swept this, right? This is smart money inducement right there. We got that smart money trap coming back down, come back up. We failed. So if we failed, right, what's this? That's going to be a weak low, right? And so now what do we see on the smaller time frame? I see on the internal structure, the internal fractal, we see a sweep and a break in structure right here. I also see a fair value gap right here. So this one, I would definitely be looking to enter right here, right off of this block. You might say, oh, Matt, well, those are equal highs. No, they are. I mean, technically, sure. But we swept smart money entry point right here, a wick, right? Smart money entry point. We just swept it, took out any of those. Again, imagine if I was holding this position, right? The one that we took from right here. Imagine, right? My stop was just above there. That would have taken me out, especially with some spread. Definitely would have taken me out, right? And so now that we're taken out, I know that there's a high probability that we at least get down to this block here. Why that block? Well, we have a nice order block right there. Again, where is it? 1, 2, 3, 4, 5. So if it's going to come back down and go up, then it's probably going to come down to here. So let's see what happens. Okay, so we can't break below that. Look where we go right back up into that order block / fair value gap combo. I'd put my stop just above here with spread. Okay, I'm not going to ignore that because I'm not going to pretend like it's a bigger risk to reward than it actually is. So we'll just add 0.3 just to cater to your spread. And we're going to target right here. Okay. You can see what's this right here. We have a sweep on liquidity after mitigating. We come back down. Now we break, right? Now we break this low. So now we have a shift in market structure right here. We have a shift in market structure right here. What else do we have? Well, we have a consolidation, we have a sweep, and we have a break back down. There's a little fair value gap right here. Tiny fair value gap right there. If I just mark it out, it's significant. Every fair value gap matters, right? Like, I mean, you can't just overlook it just because it's small. It's still meaningful. Okay. And so then we have this block right here that's swept liquidity. So if you didn't enter there, what I would wait for is just some inducement. I'd wait for some inducement like that. You can see here we have a nice swing high form. So what I would do is just mark that out and say, okay, now we have some inducement to take back into this level here. Okay, I would not be surprised. Now, if we see that target, remember what we said our target was? The 50 level. Okay, so 50 level will shed off some position right at this low because that's going to be our weak low, right? So let's see if we get a nice pullback back up. Boom. What does it do? Respects this order block right here. It doesn't even get up to it, I don't think, actually. Takes out your weak low. Boom. This is where you're going to be taking partials there. So this already, if you didn't take even this one or that one, and then this one partial, well, you would already have one position up here, one position up here. This one, maybe a little bit more aggressive. This one, very good. Okay. And so you can see we roll down, tag that level, look at the response, right? Why is it responding here? Because remember, that's a support and resistance level, right? That's a support and resistance level. You know, you're going to get some sort of move to induce buying into the market, and then you're going to see a boom, right? Makes sense, right? Because I mean, this is where everyone and their mom is going to be longing from. It's, if you look at, we have a trend line, we have support, we have, that's a huge confluence right here. Okay, that's a huge confluence. So what we want to see first at these levels is we want to see some manipulation. We want to see some manipulation. Okay, so that's it for the shorts on this side. And now let's look at for longs, right? Because now we're back into this level. So if we're going to look to go long, and now look too, right? We have a cause, we have a reason as to why we would get back up here. We have this impulse, consolidation, or correction impulse. And so we know that we're likely to get back up to there. There is at least, remember that gap that we have up here too, that's just above it, that I would be definitely targeting. Okay, so 13,900 again. And now let's see the development on this. So this is where I started looking at it and I was like, oof, this is looking really good. And guys, apologize again, my dog. This is where I was really looking at it again. We see a significant sweep right here. We see a significant sweep right here, significant sweep right here, right? That's 1, 2, 3, and potentially going to see another one with how inefficient this leg came back up. So if we see another sweep, then that's going to be good. Boom. Okay. So this is actually where I was looking at it right here. As soon as it swept this, I was like, okay, personally, I don't think there's any more retail money in the market. And I think that all of it has been manipulated out right now. We're in this 1 hour key level right here. We're at we just hit the 550 big figure. Okay. And so now I'm waiting for my setup. If you have been watching any of ICT's stuff lately, you'll notice that what's this? A swing point. So as soon as that breaks, you can look for your what? After some significant sweeps, you look for your fair value gap entry. And what do we have here? We have fair value gap resting right above all this that didn't get filled. To me, this is a potential strong high where we have consolidation, sweep up, inducement. So I would anticipate that at least this inducement get filled, right? And that's what I was trading today. Okay. And then, oh, I just fast forwarded through it. I'll show you right here. This was the confirmation of it right here. As soon as we broke market structure, or we shifted market structure right here, as soon as we see that, plus we have a what? Fair value gap right here. Right at 50% of that fair value gap, we have what? An order block, right? 2 last down candles, mitigated this low right there. So again, just following the ICT entry protocol right there that you guys have seen on his videos, you can put your stop right below this swing low and you should be fine. And so that's what I had. As soon as it got confirmed there, that's exactly what I did. I've been using this model, this entry model, for a little bit longer, just because I knew about it prior, to the YouTube content. But it's been something, it's a great entry parameter. You just have to know when to use it. And again, after we see all these sweeps, we're in a significant level. I knew that this is probably going to be that draw on liquidity up here. At least I was looking to get up to here. So by this time, I'm already at what? 3R. I can take out partials and move my position to break even, right? So what happens here? We dabble in. That looks like a scary candle, right? Oh no, it's going to stop me out. Look at the next candle. Massive, right? So don't worry, just follow the protocol and it works. Okay. And then there's another one right here where I said, okay, look at this fair value gap right here, right? It's the exact same setup right here. We break a key level here. I also saw that right here, we were using, this is like a little buy model within here, a little market maker buy model. And so I said, if we're going to continue up, we're probably going to use the 50% of that and use this block right here. And you can see what happened right after that is we dabbled it and broke through it. So this is where I took majority of my profit right here. And then I just left a bunch running, or I left like 75% running to hit this level up at 900 right up there. And then I went on to the 5-minute, I believe it was, and you can see, oh, what do we have here? Well, we have kind of a very similar thing, right? We have a shift in market structure right here. shift in market structure right here. This is my breaker. Within that breaker block right here, what do we have? Fair value gap. So this is another one where you could have just taken it right off of, directly off of the 15-minute or the 5-minute, sorry. And you can see it dabbles back in there, dabbles back in, off to the moon. Okay. And so one of the things that's really interesting as well that happened is you see it another time on the 15-minute, same fractal, right? Like it's crazy, but it's the exact same thing. What's that? Breaker block, fair value gap. We took out some swing points right here, right? Some significant swings. We dabble back into what? Fair value gap. Okay, I'm not making this up. Additionally, before the news event, we made this swing low. What happened at the news event? We take out that swing low. You can even refine it into here. We dabble into that fair value gap, and then we rip up. So we take out that swing low before that run up. Okay, and so that's what I was looking at, guys. That's another 10R. I personally took it off before the news event because that's just my rules. I don't hold positions on specifically on FOMC unless I'm like in from a few days ago, like unless I'm in from here and I have all this space, because the likelihood I'm going to get stopped out with slippage from that is at least less probability than me getting stopped out from slippage or with slippage on something entering like right here, So I don't do that. So I took out my profit right here. It was somewhere in here before the news event. I think it was at 1 p.m. So yeah, right here. Just took it out and called it a day at a good 6.5 R. And you can see actually, if I just pull up the paper trading account, you can see in the account history. So I started this. I just want to build this up for YouTube and stuff like that. But I started this on February 15th. So a couple of days ago at $10,000. Took a big old L to start it off, right? Little 2% L, and then just been winning. Took a couple wins, and so this was today. I took off majority of the position. At what was that? Closed long at 13,635. So that was majority of the position I took, and that was at 13,635. Which, if I just take this off, you'll see that 13,635 is right here, right at that gap, right? Like I said, wait, was it on the 1 minute? Yeah, it was right here. It was right at this gap that I was saying, that I was like, yeah, there's a fair value gap right here. I'll take off majority of my position right when we get to that. Okay. 13, what was it? 13,653. 13,653. Yep, you can see. So as soon as we dabbled into that zone, then I took it. You can see 673, 673. After it came back down, or after I saw it come back down, I just took off some more there, and then I just left a tiny bit on to run. Okay, so yeah, that's it. But anyways, what I was going to say is I want to just build this account for YouTube and everything, so then you guys can actually see that I'm actually trading. Like I can actually trade. Obviously, like ICT says, you can't fake this like the trading view ones. I can pull up a MetaTrader and I can manipulate that in some way. So if I can do it on here, at least you guys can say, okay, yeah, this guy knows how to trade. Not like I care or anything. If you guys think I can trade or not, it doesn't impact me, but just so, I don't know, maybe you guys can get a little bit more confidence in what I'm saying. So anyways, that's it for that. That's all the price action analysis. I hope that was super good. Let's talk psychology for a second, because I've had a couple messages about it today. And I think it's an important one to go through. Okay, so psychology, right? I find it hilarious, or not hilarious, because I used to think like this as well, but I think that there's really a significant focus on psychology when that's not the problem that you're feeling. So I think with anything, like the way that I diagnose my problems, and I started off like this, is I ask, I start off like this. Okay, so I ask the question, so what problem do I have? Like, what's the problem I'm trying to solve here? That's probably a better way to put it, because I have plenty of problems. What's the problem I'm trying to solve? Okay, and then after I write that down, then I'll explain the problem. Okay, so say for example, if I'm like, oh, I'm inconsistent, right? This is the problem I'm trying to solve. I'm inconsistent with my strategy. And then I explain the problem. And so I just keep typing. I keep typing, and basically talk about what the problem is, why it's there, stuff like that. And after I'm done typing, I realize that the problem that I'm trying to solve is not my problem. It's not the root problem, right? And so the third question I ask, say, what's the root cause, right? Or the root problem. Because after you start typing, you start to realize I'm inconsistent. Yeah, but why am I inconsistent? Oh, I'm inconsistent because of my psychology. No, I'm inconsistent because of X, Y, and Z, because I didn't execute on my plan because of this, because of this, because of this, right? So that becomes your root cause. And then what's the solution to the root cause? Okay, so this is actually a good way to diagnose any problem that you have, like regardless of whatever facet of life it's in. If you have an issue, like write this out, like what's the problem I'm trying to solve and what you think it is, then explain it. Keep typing until you realize what the problem actually is. Like keep typing and say, oh yeah, this is my problem, or I'm inconsistent because because maybe I'm sleeping in all the time or whatever. And it's like, okay, your problem is not that you're inconsistent, then your problem is that you're sleeping in and being an absolute buffoon. Like wake up on time. You know what I mean? Like that's going to be your root problem. That's going to be your root cause. Then how can you solve that? Well, buy an alarm, right? So obviously that's just a simple, silly idea, but like this is the kind of 4-step process that I go through when diagnosing problems. So it's definitely a good one to go through if you specifically with your trading. But how does this relate to psychology? Well, because I don't think a lot of your problems are going to be psychological problems. In the beginning, the main problem that I see is that you don't have specific parameters, or like you don't know exactly what you're looking for, right? The step one is you have to know exactly what you're looking for, right? Exactly what you're looking for. So if I'm looking for, like what I would say is you have to understand how to or start off with your higher time frame. Okay, let's say it like this. You have to have your standard procedure, your standard operating procedure, right? You have to do the exact same thing every day. You have to start off, say your standard operating procedure is starting off on the daily, the 4-hour, and then the 1-hour, and you do certain things on those levels. You mark out, you're focusing on liquidity and structure at these levels and points of interest. Okay, boom. So you mark them out, you get your idea for the day. Then you go to your next thing and you do the standard operating procedure on the 15-minute, the 5, and then the 1, right? Say for example. So that's what you go to the next time. So you have this standard operating procedure that you flow through. And then when you're done that, then you do what? You set alerts, right? You set alerts, and then you follow through. So it's like this diagram of like what you're doing every single day. And like the problem is that you blame psychology or psychological issues for not executing on your trades when you don't even have a thing that you do consistently every day. You don't even have a process that you follow through. When you're entering trades, sometimes you're using, the entry model like this. Sometimes you're trying to catch the very low. And so you're entering on the limit there. Like you're not doing the same thing repeatedly. And so no wonder you don't have a grasp on your psychology, because you need to do the exact same thing and know exactly where your setups were throughout the day. So then you can see objectively what you were doing and compare with objective measures, right? If you were following your strategy or not. So for example, we look at today, right? And I see that there were how many of my setups were there based off of my strategy, the one that I use. Okay. Well, I know that there was, let me just use this tool instead because it's nice and clean. I know that there was an entry up in here, right on the 1 minute. On the 5 minute, there was this entry here. That was a valid entry for me. And then there was this one up here and this one up here, right there. And then there was this one down here. You could also say that there was probably one in here as well. But anyway, so let's say we have 1, 2, 3, 4, 5 setups. Okay, we'll say 5 setups today objectively that measured all my criteria that I definitely could have been in if I were awake or if I were on them. How many of those setups did I hit? I really only hit 1, right? Why did I miss the rest? Well, 1 and 2. Actually, this was in London. So this would have been before I woke up. So 2 of them, I'm not able to hit, right? I'm just not, because I'm not up in the morning. So that leaves 3 available options that I could have hit. I hit 1. So I'm 1 out of 3 of my setups for the day. So I hit 33% of my setups for the day. How did I hit 33%? Or why did I miss these ones then? Oh, well, I slept in. All right, well, now if I keep logging this every day and I say, well, I slept in and I missed 2 setups, right? Two objective good setups of my 3 for the day. They were all winners, right? All my setups. And so this is my problem, right? This is why I missed it. And if you do this every single day and you start repeating these mistakes right here, why did I miss my setups? Oh, it's because I slept. Oh, and then you can start to say, oh, I missed these ones. Say I was awake this time, but I was too scared to enter. So I just say, I can say like emotions, right? I was fearful to enter. And so I didn't enter, even though I knew that it was a good setup beforehand and I knew everything was good. Then you can start assessing your psychology. You have an objective measure to say, listen, I keep messing up and I keep avoiding pulling the trigger, right, on setups, even though they're there. And I've seen it. I have 3 setups for the day. On 2 of them, I didn't pull the trigger because I was emotional, because I'm fearful. Now that you have an objective measure on what you have to assess, hey, it's fear that's holding me back. So, let's set the monthly goal. Okay. Let's set the goal of the month is to execute consistently on my setups. Okay. So we execute consistently on my setups now. In the face of fear. Even if I'm feeling fearful, I still execute. That's my goal for the month. That's the only goal I'm focusing on that month, is just executing. I don't care about the profit. I don't care about the losses. I don't care about anything. It's just focus on execution for that month and focus in the face of fear. If the problem is sleep and I keep sleeping in and missing my setups, well, then that's something that I have to resolve. And that's a real thing, right? I was joking about it earlier, but it's a real thing. It's, oh, I was tired. I stayed up late that night. I slept in. Over 300 days or 200 trading days, you're going to see that, oh, wow, the sleep thing popped up a lot. And there were actually great opportunities that I could have taken that day. There were 2 opportunities that I missed of sleep that day alone. And look at how big they were, right? How big that run was. Okay. And so if you do that multiple times throughout the year, you're going to say, Jesus, I left a lot on the table just from sleeping in. So to get 1% better, or maybe a significant amount better, you wake up on time, right? Maybe to get significantly better, you have to work on that emotion, but you have to set that as your monthly goal, right? That's the focus on the month. And I'm going to work solely on that and improve this aspect of my trading. Then I'll move on to the next, because there's always going to be problems. No matter how good you get, there's always some problems that come up. It's just, they're new problems, right? It's just like when you don't have money, you have money issues. And then when you do have money, you have other issues still, they don't, all your problems don't go away. There's still problems, right? So that's essentially what I would say about psychology. Is I wouldn't value it. Like, I don't want to say that, because psychology is important, right? If you're having difficulty pulling the trigger, right, that's something that you need to work on. But I think that the first thing that you have to do is, 1, get an objective system down where where you can see, this was a trade, this was a trade, this was a trade, 100% because of my rules. And the rules have to be objective, right? You can't be like I can't look back on this and be like, oh, like, this was a setup here, but like, no, it has to be, this was in my zone, check. It was in my higher time frame zone, check. I have a lower time frame entry, check. This is where I would get out, or majority of my position, check. And so you have these objective measures. Okay. So you have to have, number 1 is you have to have objective measures. Okay. Objective measures. Number 2 is you have to track performance, or you have to track those measures. Okay. So you have to track those measures, meaning, like I said, if there's 3 setups in the day, right? 3 setups that you were available for in your trading session, and you missed 2 of them, right? Why did you miss those 2? And track exactly why. So you have an objective measure to calculate how many setups there were and measure them, right? Track those measures. 3, set your monthly goal, okay, based on your problems. based on your problems. Okay. So now you have a monthly goal. If you're missing them because you're sleeping in, okay, now your goal this month is to wake up every day. Like your goal is to, that's the only goal that you're focusing on, right? You focus on that. And then number 4 is you give yourself a grade on that goal. Because now you can start to say at the end of every day, how did I act in accordance with that goal, right? Did I follow through? Did I get an A+? Did I get a B? Did I get a C? Did I fail completely? Did I sleep until 1 p.m. and I missed every session possibly known to man? Like that, again, you have to do that. And then you track for that month. This is what you do, right? And this will increase this will better your psychology. Why will it better it? Because you're starting to go through the process. You're starting to learn. You're starting to understand what exactly your problems are. And you're not just blatantly covering it with the umbrella of psychology. Oh no, my psychology is messed up. I don't know why I can't pull the trigger. You can't pull the trigger is because you don't have objective measures in your system. You don't know what a setup even looks like. So that's number one. That's number one. You just see it move after and you're like, oh yeah, there was a setup right here. Right? So you have objective measures. You don't have objective measures and you're just saying it's your psychology. You're not even tracking those measures, right? You're not even looking at how many setups there were in the day and how many you hit, how many you missed. So, and then you're blaming that on psychology. And then you're not even trying to improve because you don't have any of this. You can't improve. You're literally just sitting there looking at the charts all day. You're not improving at all, right? And so now you don't have a goal to base off of, like a process-oriented goal to base off of, and then you're not grading yourself, right? If you grade yourself, you start to see how good you're getting. If you're consistently hitting A's, you know that, hey, look at, I'm done this. I've successfully achieved this goal. Like I'm doing well. I've settled that issue. Now that my emotion for pulling the trigger is gone because I'm getting A+ every week on this, every week, every day, then I'm good. Obviously, there's going to be times where you miss trades. Like it's just the way it is. That's not what I'm saying here is that you have to hit every one, but you want to make sure your trade efficiency ratio, that's what I call it, the TER, your trade efficiency ratio is going to be on the positive side consistently. That doesn't mean one day you lose or one day you don't take your trade, And all that is this, right? Your trade efficiency ratio for me is there's 3 setups in the day. I took 2. Therefore, my trade efficiency ratio is 66%, right? That's perfect. Right? I took 2 out of the 3 trades. If I took 1 more trade, right, then I would have been at 99%. That would have been perfect. That would have been, I took every setup that there was, perfect. But this is fine. If I take 66% of my trades that were there, that's great. Now let's keep on working on pushing that number up and being as efficient and as effective as we possibly can be as traders, right? This is a business. We want to be optimizing. But you can't optimize if you don't know what the hell you're looking at. You just blame it on psychology. And that's an issue that I see is people say, oh, my psychology isn't good. No, you just haven't put in the work. You haven't put in the work that it takes to get to the level where you're consistently executing. You don't have objective measures. You're not tracking, you're not developing, you're not improving. You're just looking at the charts, hoping that one day you gain enough confidence to execute on something, right? Put in the time, put in the effort, stop making psychology your blanket statement of saying that this is your problem. This is not your problem. Your problem is that you didn't put in enough work. Put in enough work to your strategy. See it play out 100, 1,000 times over and over and over again. Build case studies. If you build 1,000 case studies of one trade with one setup, that you look at what happens on the higher time frame, you have your standard operating procedure on the higher time frame. You go down to your smaller time frame. You have your entry model, and then you have your take profit, the way you manage and take profit, and you go through 1,000 case studies of doing these exact same thing on that time frame, on that time frame, on that time frame. I can guarantee you, when it happens in real time, you're going to start to say, well, fuck, I have to execute on this now. I literally did 1,000 case studies. It looks exactly like my case studies, right? And that's what's going to happen. And so what I would say is focus more on this and less on this. The psychology comes when you know what you're looking for. When you know what you're looking for, then you can assess your issues psychologically. Then you can assess, hey, I see the setup that I have these 1,000 case studies on, but when it happens in real time, I just can't pull the trigger. Like, I don't know what it is. Okay, well then if that's your case, if that's the problem, then it is psychology, right? If you know what your setup is, you put in the repetitions, you know exactly what you're looking for on every time frame. It's just when it gets there, you just can't pull the trigger. Well, then what I would say is, again, do that process of that's your monthly goal, but stop trying to trade money. Like stop trying to trade, especially like, okay, if you're trading, say, a $10,000 account, and that's a lot of money to you, that's all your money, and you can't take trades at 1% or whatever, then stop trying to trade this account. Put $100 into an account and start trading that instead, because now this means nothing to you, right? That's literally one trade on here. So put $100 into account and then make it your goal on this account. You're going to take every single trade that presented itself, every single one. That's your goal, and you grade yourself on your goal for that account. And then you look at the performance after, and you're going to look at it, and if it's a profitable system, you're going to be like, Jesus Christ, if I just took these on my main account, I would be set. I would be set. And you unlock this in your mind that you say, wow, if I do this, then I'm going to be profitable. If I stick to my risk parameters, if I stick to my setup, if I stick to it and I just execute consistently, you can extrapolate the data that you get from this, and you can extrapolate it to this, and you can start building these cases in your mind to say, wow, look where I could be if I just do this on this account. And that's how you fix your psychological issues. Don't rush the process, guys. It takes time. I've been at it for 5 years and 5 and a bit years, and it's still a process for me. Like there's still times where I have psychological issues where I fall into the trap of maybe I take a couple losses on my main account, and then I start guessing if should I take the next one. But I always try and revert back to say, hey, Matt, we've done the reps, right? We've done the reps. Let's pull the trigger in the face of fear. Again, opportunity doesn't present itself without anything. You have to take risk. Risk is the cost of opportunity. So take that risk, yeah, and achieve the things that you want to achieve, right? Wear it on the chin. If you make a wrong decision, that's fine. Forgive yourself, learn from it, move forward. That's it. That's all we can do as traders. And that's it. I wish you guys all of the best. Thank you guys so much for all the support and everything. I'm so grateful for you all, literally every single one of you guys. And I hope this has helped. Sending love to you all. I'll catch you guys in the next video. Cheers.